NIO stock analysis. Do analysts rate it as a buy, sell, or hold? Well, as we all know, as of now, NIO is a Chinese company, so of course it'll be in the buzz for a long time, but it has been for years now. And if we're investing in this stock now, is it worth it? Can we be more sure about this stock's future status? Hey everyone, welcome back to Finance Insights, you all. Let us talk about what's up and down NIO has been facing, and if this is a good time to hold the stock or let it go. Let's dive into the video, shall we? It is NIO's goal to get into the burgeoning market of electric automobiles. However, the EV firm has just shown its latest electric SUV, a potential competitor to the Tesla Model Y. The stock of NIO may be a good investment right now. NIO, the Chinese Tesla, was founded in 2014 and has since seen its sales soar. NIO, like Tesla, produces high-end electric vehicles. Instead of working with a privately held automaker like Tesla, NIO collaborates with a state-owned enterprise to build its electric vehicles. Competitors to Tesla in China's fastest-growing EV industry include NIO, XPeng, and Li Auto. Additionally, they face off against BYD, a Chinese EV and battery company, and Volkswagen, a German car maker. VW increased global EV sales by 27% in the first half of 2022. Sales of all electric vehicles in China tripled to 63,500 in the first 7 months of the year, according to the company's July 15th announcement. Only in China did Volkswagen sell more than NIO, which shipped 50,827 electric vehicles the first half of the year. As chip and other COVID-related issues impacted both companies, revenues increased. There was once a perception that German automaker Daimler was lagging behind Tesla and BYD when it came to electric vehicles. As demand for the new ID.4 electric SUVs grows in China this year, Volkswagen's aiming to double China's sales of electric vehicles. NIO unveiled the ES7 on June 15th, a cutting-edge electric vehicle capable of sprinting from 0 to 60 miles per hour in less than 4 seconds. It's expected to compete with Tesla Model Y and other electric SUVs, according to NIO, who calls the ES7 its fastest SUV yet. Management reportedly discussed ambitions for a mass-market electric vehicle in 2024 during a NIO earnings call on June 9th. In addition to increasing its target market share, the anticipated low-cost NIO sub-brand might also help the company's overall growth. The Chinese electric vehicle manufacturer also said that starting in 2024, it will produce its battery packs. The technical analysis of the NIO stock can be considered as the shares of NIO, which are traded on the New York Stock Exchange, have fallen slightly in July after rising by 25% in June. A short claim seller of exaggerated battery sales revenue was initially ignored by management. Then on July 11th, the corporation announced that an independent committee would investigate the claims. NIO stock's now testing its 10-week moving average after a recent decline. The once soaring EV stock still well below the 200-day average and more than 57% below its 52-week high. Following a steep decline this year due to delisting fears in the United States and China's COVID lockdowns. Even amid a dramatic market decline, NIO's relative strength line is therefore dragging. A strong rally lasted for the majority of 2020. Stocks that are outperforming the S&P 500 index have a rising line on the RS. In the graph, it's the blue line. The IBD composite rating for these shares is a dismal 25 out of 99. The ranking is based on a combination of important fundamental and technical factors. An RS rating of 31 indicates that just 31% of the stocks in IBD's database have outperformed NIO stock in the past year. There has been a lot of buying in NIO recently, as evidenced by its accumulation distribution rating, which now stands at an A. As of the end of June, 878 mutual funds held shares in the company. According to the IBD stock checkup tool, there have been no rising fund ownership quarters for NIO. Well, let's do a bit of analysis of NIO's earnings and fundamentals. So NIO falls short on several crucial financial indicators. If you're searching for a fast-growing and profitable company, this isn't the place for you. The EPS rating for NIO stock is an unimpressive 8 out of 99 points. EPS measures a company's earnings growth in comparison to that of its competitors. On a scale of A to E, NIO has an SMR rating of D. To calculate the SMR rating, analysts take into account the company's sales growth, profit margins, and return on equity all at once. NIO's first quarter net loss was drastically cut on June 9th, meeting expectations. EV deliveries increased by 28.5%, just outpacing revenue growth at 24%. NIO's dismal EV delivery forecast for the current quarter triggered a flurry of analyst price target reductions for the company. Since the beginning of June, however, the electric vehicle manufacturer has shown an improvement in production and deliveries. despite the supply chain volatility and the problems in vehicle delivery due to the recent COVID-19 comeback. NIO CEO William Ben Lee said in a news release on earnings on June 9th, "We experienced a significant demand." FactSet's polled experts predict NIO will more than triple its losses to 63 cents per share by the end of 2022. This year, revenue is expected to increase by 59%. New electric vehicles will be launched and chip headwinds will ease, allowing NIO to decrease losses to 23 cents per share in 2023. As a result of the epidemic, NIO's electric vehicle sales more than doubled in the year 2021. 35 experts rate NIO stock as a buy or hold, with 33 of them deeming it a good investment. No one is selling, according to FactSet. The EV market in China is getting more competitive. NIO's electric SUVs and automobiles are aimed at China's affluent market. The Chinese and American auto manufacturers are also vying for the market. There are several other high-end electric SUVs built in China, including Tesla, General Motors, Ford, and Volkswagen. NIO CEO William Lee predicts that electric vehicles would account for 90% of all new automobile sales in China by 2030. 3 new electric vehicles are expected to be launched by NIO in 2022 in the face of fierce competition. Deliveries of the ET7, the company's first electric sedan, began in March. On June 15th, it introduced the ES7, a 5-seater electric SUV. The NIO ET5 compact vehicle will go on sale in September. William Lee, CEO of NIO, sees the ET7 as a direct competitor to Tesla's Model S. He believes that the ET5, a Model 3 competitor with a lower and more accessible price tag, will expand NIO's consumer base. A Model Y competitor is visible in the ES7. The ES8, ES6, and EC6 are all luxury electric SUVs sold by NIO. Meanwhile, NIO is expanding its operations outside of China. By 2025, it plans to have EVs in 25 nations. BYD, XPeng, and Li Auto are all present in Norway, and Li Auto is also planning to penetrate the European market. On the continent, Chinese EV manufacturers are posing a threat to Western automakers like Tesla. China's NIO, Li Auto, and XPeng are stepping up their efforts to compete with Tesla on their home ground. Global EV sales have increased by more than 2/3 in 2021 compared to the previous year, according to the International Energy Agency. There will have to be a rapid expansion in battery supply chains and electric vehicle production capacity, according to the IEA. However, NIO and its rivals must contend with a waning supply of semiconductors and a growing lack of batteries. NIO's battery subscription service is a first for the industry. The cars and batteries are sold separately by NIO. NIO EVs can be purchased for a lesser price with no batteries and then rented for a monthly cost. They also have the option to replace their car's battery at any time. More than 5 million battery swaps have been performed at NIO's 884 China battery exchange stations. It has expanded its competition with Tesla in Norway by bringing battery replacements there as well. Is NIO stock a good investment right now? Well, NIO's financial health is improving from a basic standpoint after debt and liquidity concerns dragged down the stock price. Although losses have been slashed, the company's revenue has increased. And that's going to do it for today's video. Hey, we'll be back with more information, so please keep in mind this video is for information purposes only. It does not promote you to invest in any stock. If you want to invest, research about the stock will be highly advised. Please give us a thumbs up on our video and make sure you subscribe to get more information like this, and we'll see you next time.